Welcome Bitcoin friends, Bitcoin Mamo. Today we're going to look at the Bitcoin charts, we'll do some TA, look at various time frames, and we'll also take a look at market Cipher. So I want to start here on the monthly time frame with a clean chart and work our way down. So we do still have another 10 days before the monthly close. At the moment we do have a green candle here after this big correction from 69k. But I want to pay attention to this order block here. These order blocks come from a red candle in an uptrend or a green candle in a downtrend. They're areas of supply and demand, and they become of interest later on when we interact with those levels. They can act as support or resistance. So I think this is a key order block on the monthly. We don't get many monthly order blocks. And if Bitcoin is to turn back bullish here, I would need to see Bitcoin close the monthly above this order block and start using it as support on a possible retest and bounce. The reason I'm pointing out this order block is just looking back in the past here. If we look at the 2017 bull run here, we can see after we peaked at 20k, we did make this order block with this green candle in a downtrend. And we failed to get back above this order block, and from then on we did go into a bear market. And just looking back a bit further at the 2013 bull run here, we see a similar order block on the way down from the peak, which was around 1300. We see we weren't able to get back above this order block, and we did go into that bear market. Going back to our current price action, you can see it is a little bit different here. Instead of having that blow off top and forming that monthly order block on the way back down, we have had these two peaks here. But just looking at all three of those together, we can see why this is quite an important order block to get back above and use as support. Give me confidence that perhaps we are going to try to make new all-time highs and carry on this bull run. If we do stay below this order block, then I do think we're doing something similar to these previous bear markets, where we might come back up close to this order block, but we do not regain it, and we do continue in this bear market. And we can see with the bull run here in 2013, we pretty much finished around the end of 2013 in November, December time. And 4 years later, at the end of 2017, we finished the next bull market here. So pretty much exactly 4 years later. And with our current bull market here, we see around November, December, also 4 years later approximately, that we did form the current all-time high. So there are those two possibilities, that we are still doing these 4-year cycles, or the other theory of lengthening cycles, and this is just a consolidation range before we continue the second half of this bull run. But for me personally, I do think we are in a bear market, and any of these bounces are going to be dead cat bounces. Pulling up the stochastic RSI on the monthly time frame now, we can see we are all the way down at a 2 reading down here. And whenever we have crossed below this dotted line at the 20 level, we have entered a bear market and stayed below that 20 level for quite a long time. Can see that on both of these bear markets, and we did cross below that 20 level once we did start coming down from that 69k high. So notice a similar thing when looking at the monthly RSI here. Once we did lose this bullish control zone up here above the 70 level with this white dotted line, we did enter into a bear market, and I've just got that marked with this first bear market here. Can see we went below the 20 line on the stochastic RSI and also below the 70 level on the RSI, and we entered into that bear market. On the next bear market here, we can see the stochastic RSI went below the 20 level, and also the RSI went below the 70 level here. And from that point, we did go into a bear market. Looking at the current bull run here, we can see we did break below the 70 level on the RSI after that 65k high in April, although the stochastic RSI was still up here around the 70 level. So if we were to use both of these conditions here, once the stochastic RSI dropped below the 20 level and also the RSI was below the 70 level here, and using the previous bear markets here and those conditions, this would mean that we are also in a bear market. So taking the chart now down to the 2-week time frame, we do still have this monthly order block drawn in here, and I've also added these 2-week order blocks here, this red candle in an uptrend and this red candle in this uptrend. We also have a green candle here in a downtrend. You can see on the previous 2-week candle at the start of the month, we did wick up into this 2-week order block, but we did end up closing further down. And the previous 2-week candle did wick all the way down to this lower order block, and we did end up closing higher. So we're pretty much trading in this range between both of these 2-week order blocks at the moment. And again, to turn more bullish, I would need to see Bitcoin get above this 2-week order block and start using it as support. Like we did in this previous run up here, we lost it, we got back above it, and it became support and carried on higher. Looking at the 2-week RSI now, we have been watching for this hidden bullish divergence. We have higher lows on the price action and lower lows on the RSI. And we do see similarities with that 2013 bull run here. We can see we made higher highs on the price here, while making lower highs on the RSI. And this was a bearish divergence, and we did drop back down. We did make that hidden bullish divergence. We got a bounce from it, but it was just a dead cat bounce on the overall market structure. And with our current price action, we did a similar thing here, making higher highs on the price and lower highs on the RSI. So we did have that bearish divergence. We had that big drop down, and now we are doing this hidden bullish divergence, quite similar to 2013. We could see a similar thing here. We have done quite a lot of similarities with that 2013 bull run. We had that big run up initially in the bull run, had a consolidation, and then we did have one more run up, making that higher high with the bearish divergence. And going down to the weekly time frame now, this red box here is that monthly order block. The yellow boxes are the 2-week order blocks, and now I've just drawn in the weekly order blocks in blue. We do see a lot of these order blocks lining up around this area between around 50,000 to 45,000. So I do think we could possibly have a bounce all the way up to these areas, but I don't think we will break above 50,000. I do think we'll come back down, and that will be a dead cat bounce. But looking at the weekly order blocks, we can see with our current price action here, we have come into this weekly order block from this green candle in a downtrend. We can see we have tried to get above this order block. We did close inside it here. the previous week candle, came all the way up to 46,000 approximately. And then we did end up closing the week back inside this order block down at 42,000. We can see our current weekly candle. We also did get up to around 45,000 approximately. And currently we are down at 41,800. So if we do close below the bottom of this order block around 41,900, this would have acted as resistance. And I would be looking for price to come back down, whether we come all the way back down to this weekly order block at 35,000, or we make a higher low and possibly a W shape here, and then push higher towards the 50,000 area. And these higher order blocks, we'll have to see how that plays out. So that is quite bearish, the things I have spoken about there. But I do think we are going to have that dead cat bounce, possibly up to 50,000 here. Some of the bullish things here on the weekly time frame. We do see the stochastic RSI here started to tick up after this big cool off, currently at around a 28 reading. This weekly candle hasn't closed yet. If it can close above the 20 level, that would give a bit of confidence that we are trying to push towards that 50,000 area. And looking back in 2013, going into 2014 bear market here, with this dead cat bounce, we did push all the way up on the weekly stochastic RSI, pretty much to 100 reading before we came back down again. So we can see we do have plenty of room to move higher with our current price action and the stochastic RSI. And that could possibly take us to around that 50,000 area. We do have to wait for this weekly candle to close and see how we also close on the stochastic RSI if it is above that 20 reading. Pulling up the weekly EMA ribbon now, and this is the main reason I lost confidence in the bull run and thought we had entered a bear market. Once we did start closing below this weekly EMA ribbon here, that led me to believe that we are entering a bear market, and any bounce would be a dead cat bounce. We can see on these wicks we did attempt to get back above this ribbon. We did get rejected twice here. Currently the top of the ribbon's at 46,500, and for me to flip bullish would need to see a whole weekly candle open and close above this ribbon without touching it at all with any wicks. That would give me more confidence that we are going to push higher. And for more confirmation, I would like to see Bitcoin get above these weekly order blocks here and start using them as support. We see in previous bear markets here, this is 2018 after the 2017 peak, we came into the weekly EMA ribbon. Once we did start opening and closing weekly candles below the ribbon, it confirmed we were in a bear market, and any of these bounces were dead cat bounces, and we can see we didn't have any candles, including the wicks, that were completely above the weekly EMA ribbon on all these bounces. And looking at the 2014 bear market here, we can see initially we got support on the weekly EMA ribbon. We did get back above it once we did open and close candles, including the wicks, completely below the weekly EMA ribbon, confirmed that we were in a bear market. And every bounce after that was a dead cat bounce, and we didn't get back above the weekly EMA ribbon until after the bottom of the bear market here. So I'm happy to be proven wrong. As mentioned in previous videos, I sold half of all my crypto once we spent a whole week below the weekly EMA ribbon. Did sell it above 40,000, between around 40, 43,000 here. And yes, we did go a little bit higher here, but as we can see, we're pretty much around that same level where I did sell half of it. And I am happy to be proven wrong. That's why I just sold half of it. If we do go higher, then I'm happy also that I still kept half and I can profit on both sides. If we are to enter a bear market, we end up coming down somewhere between, say, 20, 25,000. Then I have that money on the side to re-enter the market during the bottom of the bear market. and be in a good position at both sides, whether we move higher or we move lower. Another thing that leads me to believe we're in a bear market is doing a fib retracement here from the 29K low to the 69K high. We do see that we lost that golden pocket area here. If we were to bounce around this 42K area and hold the golden pocket, then I would have kept that bullish bias and not think we're in a bear market. We would also held that weekly EMA ribbon if we were to do that. But we can see that we lost the golden pocket and had a bigger drop down. And again, this is the first thing we need to reclaim here, as well as this weekly order block. We need to get back above the golden pocket and reclaim it, use it as support, and test some of these higher order blocks. We were also watching some of these trend lines here, this one connecting the 65K high and this high after the bounce. And we were looking initially to flip this into support here. And once we did lose that, it did add to losing confidence in this bull run. And we also had a trend line here connecting the overall lows. And we did have an intersection point here. And we did close below both of these trend lines. We were able to get back above these trend lines briefly, and we did close a weekly candle above it. But we can see that we weren't able to use it as support and start to push higher again. With the next weekly candle, we did close back below this major trend line. So it still looks bearish to me. We haven't reclaimed the golden pocket. We haven't reclaimed this trend line. And we haven't reclaimed this first weekly order block. Pulling up the VPVR now, the amount of volume traded at certain price levels. We obviously have this massive area where we did spend a lot of time trading between 30 and 40K. So I do think this is a big support area and will act as support for a while here, as we do get these dead cat bounces along the way. And perhaps eventually it will break as we enter the bottom of the bear market, somewhere between 20 and 25,000 possibly. We would also look for that 200-week moving average, which is this red line, as during bear markets we quite often use this as support, as we can see in the 2014-2015 bear market here. Came down to the 200-week moving average. That was pretty much the bottom of the bear market. And also in 2018 here, 2019, we came down to that 200-week moving average. That was the bottom of the bear market and a great time to enter. So currently that 200-week moving average is down at around 20,000. And if we did spend time here before we eventually reach the bear market low, this 200-week moving average could be possibly around this next spike, around 24,000. I do think this is going to take some time to play out and possibly be in a bear market until the end of the year. But looking back at the VPVR here, we do see the next biggest spike is all the way up at around 47,000. And with this previous wick from a week ago, we did wick up to around 46,000, which is the start of this VPVR level, which could act as resistance. So we could go a bit higher here, all the way up possibly to around 50,000. I do think this will act as resistance and we will get pushed back down. Just looking at market cipher now on the weekly, we did get that weekly green dot and it did get confirmed. We do see the previous weekly green dot here did result in quite a big move to the upside. So that is something for the bulls. But we do see the money flow here in green. The amount of money entering the market has been coming down since this 69K high. And just looking back at the previous bull runs, although these weekly green dots are very profitable in a bull market, in a bear market they do just result in dead cat bounces. As we can see with this weekly green dot here, we did get a dead cat bounce. And the red dot indicated that that bounce was over. We came back down, and also this weekly green dot was just a dead cat bounce. But we do notice that green money flow here was already starting to come down, and we were already entering a bear market once we did get these weekly green dots. Looking at the 2013 bull run here and the 2014-15 bear market, we see a similar thing. We got that weekly green dot here. It did just result in a dead cat bounce. We also see that green money flow was already starting to come down here, and we just got that dead cat bounce. So I do think we're in a similar stage here as in 2014 with this dead cat bounce, with the green money flow coming down, and also in 2018 here, the money flow was a lot higher in that 2018 bear market, so we do look more comparable to the 2014 bear market here. So I think I'll leave that one there. That was a bit more of a longer term outlook using the higher term time frames, and I think I'll make a separate video looking at the daily time frames and down to the 4-hour time frame for the more shorter term price action. So thanks for watching. Sorry for the delay in the videos. I hope you enjoyed that analysis. I'm Bitcoin Mamo. I'll see you next time. Bye.
Yeah.